Hi, I'm going to discuss about the fast track exit scheme available to a company. A company comes into existence by virtue of a law, the Companies Act 2013, and it stay in existence under the Act. There is a provision also under the Act for the smooth exit of the company in case your company is non-functional or is dormant for a number of years and there is no liability in the company. The registrar has also power suo motu to strike the name of the company from the register. In two cases, in case the company is dormant or is not doing any activity for the last 2 years, and second is the company has not started its operations. However, before closing the company, the ROC gives a notice to the concerned directors about the closure, and if no representation is received, the ROC can go ahead to close the company. This right of closure has also been given to the directors or management of the company to apply for closure. But before applying the application, they have to make sure that there is no liability or legal action or any statutory dues for the company, and it can go ahead for closure. For that, the process is that they first need to close the bank account of the company, settle all the accounts. There should not be any debtor or creditor, they should be cleaned up. And once this is clear and the bank account is closed, they can move ahead for the preparation of the documents. The directors are required to give an indemnity stating that if there is any liability or losses which is incurred after the closure, they will bear the loss in full. Also, they have to give an affidavit stating that they are aware of this and we are going to close the company. The indemnity and the affidavit are required to be notarized and stamped, and in case of foreign directors, they are also to be notarized and apostilled in the home country of the directors. Also, a statement of affairs is to be taken from the auditors or a chartered accountant stating the capital and the liabilities of the company. It should be there that there is no other liability or anything there, any statutory dues in the company, which is very important. And also the company must have filed the annual accounts for the last years. The annual forms should have been updated, and they should also ensure that there is no business operations or activity in the company for the last 2 years. If it is there, you cannot go for closure of the company, and you will have to wait for 2 years to remain the company to be inactive. Once the form is ready, you can go ahead to file with this, and also you need to take a resolution from the shareholders for the closure of the company. You should hold a board meeting for the approval of the closure, and then a shareholders meeting is to be convened. You can either convene the shareholders meeting or you can take approval from the 75% shareholders of the company in value of with regard to value of the paid up share capital of the company. You can go ahead and file the form. The filing fee is rupees 10,000 for the closure, and the ROC once received the closure, it verifies the form, and if there is any question or any irregularity is found, it can raise it and sends a mail to the email ID from which it has been filed, and you have to reply accordingly. After this, once the ROC is satisfied, they issue a notice that the company is going to be closed, and your status of the company becomes from active to under strike off. After waiting for some time, and everything is it is published in the official gazette by the ROC, and after that the ROC closes the company and removes the name of the company from its registers and issues a certificate for dissolution. From that date, the company stands dissolved. However, the personal liability of the directors remain there to meet any losses or liability which comes thereafter. The company can be revived even till 20 years after its closure. Within 20 years, anyone can file and revive the company. This is the complete process for the dissolution and all, because this is a fast track scheme which has been assigned to the companies. In case of small companies, this is very useful, because if you go for the winding up process, which is lengthy and cumbersome and expensive, you can go for fast track if you meet the criteria. So this is a very simple process. There is no other, and it also takes very little time, or time involved is very less. Only thing is that your company should not be active for at least 2 years, and all your annual filings are updated. By this way, you can avail the benefit of this scheme, so that your company is closed if it is dormant, because cost of compliance is very heavy every year, and you, to save that cost or to close the company, you can go ahead for this scheme. Thank you very much.